Alrighty, I guess we can get started as people come in. Um, thank you all for joining us. This is our second in the Economic Outlook and Policy webinar series for the spring. We will have four more of these throughout the rest of the spring. So everybody register. We're excited to talk to you all. And I will, I guess, hand it over to Ian to introduce our speaker today.
Thanks very much, Miles, and welcome everybody who's already online to, this is the second of our webinars for the spring, as Miles just suggested. And today I'm very happy to introduce our speaker, my colleague, Seungki Lee, who's an assistant professor in the department and has been very busy running around the state at various county extension meetings, giving talks about international commodity markets. It's really great to have him on the webinar today, where his talk's going to have a little bit more of a focus on Brazil, but will incorporate some of the things I know he's been talking about on the road. So Seungki, the floor is yours, and I'll keep an eye on the chat room and the questions, and we'll save time at the end for questions for Seungki. So Seungki, the floor is yours.
Thank you very much, Ian. Thanks for the introduction, and thanks everybody for attending this seminar. I'm going to talk about international commodity markets with emphasis on the potential impacts on the US. As you can see in the subtitle, I will put additional focus on Brazil in this talk. So let's get started. So this is corn and soybean balance, trade balance. So this figure basically shows a big picture of trade balance in the international corn market. First, it is obvious that the market is driven by few countries, including the US, Brazil, and Argentina. And the net export of US is forecast at about 1.9 billion bushels, which is about 13.7% of our total production. Also note that although China is the second largest corn producing country in the world, they are net importer because of the high domestic demand. In the international soybean market, the oligopolistic situation is more apparent. US and Brazil are the two outstanding players here, and unlike corn, most other countries are net importers. So about 46% of US soybean production is exported. Particularly, China is heavily relying on imports for its domestic use. And given the trade balance, we can see the substantial portion of US grain is exported. So literally, we sustain life. However, at the same time, it is a market. So it is not a one-way relationship. We have to consider the competitors like Brazil and what's happening in other countries to better understand the effect of international markets on the US. So that is kind of the motivation of my talk. So this is a table of contents for today. In the presentation today, I'm gonna focus on five countries important to US grain markets, and maybe those are US, Argentina, Brazil, China, and Mexico. And first, I will show the snapshot of the current US market and export progress. Then I'm gonna share the world grain production projections. So based on that, I will discuss maybe Argentina drought issue and Brazil's rapid growth in the international market and the market situation in China, which is the biggest trade battlefield among grain exporters. After that, I will shortly talk about Mexico GM corn regulation news. And lastly, I will discuss the prospects on the 2023-24 market for the US. So let's check the US corn balance sheet first. So you're seeing the supply side estimates now. Now the harvest is done, so certainly we don't see any updates in the supply. We had very low production last year because of the weather, and the total supply is 7% down compared to last year. Maybe more interesting part should be demand. These numbers can change moving forward because we still have 5 months until the end of the market year. So overall, the demand is anticipated to be 7% smaller than last year. And the biggest reason would be the low exports. So we expect about 22% down compared to last year, as I colored in blue. And although both supply and demand are lowered compared to last year, the supply was a bit more dominant, giving us a 12% higher season average price projection. In the last column to the right, I put the USDA long-term projection for the 2023-24 market. So it is really based on it is not based on the actual surveys or observations. So we should take it with a grain of salt. But one thing useful to note would be the rebound in the ending stock. So it is very likely to see some recovery in the production and ending stocks next year, implying that the corn price may not be as high as this year. Currently, the biggest bearish factor in the market is lowered exports. So let me talk about it a little more. So as I showed before, the corn export volume is estimated to be 22% down compared to last year. And this is basically 3-year low. And based on the first week of February, the corn export is about 41% lower than last year. So this red line is indicating the current year's export progress. And the dashed line is 5-year average, and the blue line is the previous year's export records. And the USDA forecast is about 1.9 billion bushels, as shown in the as a red dot here. And maybe we should be curious why. And I have a couple of reasons that I want to pick, but before that, I first used as a 21st century scholar, I used OpenAI, the ChatGPT, which is an artificial intelligence. So what I typed to the computer was why U.S. grain exports are so low this year. Actually, I changed the question in several different ways, like why U.S. corn exports or wheat exports or soybean exports. I got more or less the same answers. So I'm just showing this one representative case. So these are the answers from the computer. First, it picked the competition from other countries, which is making sense. So it also picked Brazil, Argentina, Russia. Those are like kind of compete with US in the global market. So that is kind of one reason that we are having this low exports. And the second reason it picked was logistics and transportation issues. And this is also making sense because we had some issues in the transportation last year, especially railroad strike was kind of a tension and raised the freight. And also at the same time, in November, we have seen a low water level in the Mississippi River area, which really harmed our river system. And especially there was harvest timing. So we really had a big issue in the transportation, which lowered our price competitiveness. Third and fourth are not really important, I think, but considering OpenAI is just using the data up to 2021, so actually it is not like making answer based on any events happened last year. So it doesn't know what's happened like in Ukraine or what happened in the US last year. So based on that, we should take this maybe, okay, this is kind of not sensible to me, but anyway, that is what computer said. And lastly, the weather condition, which is pretty generic, but it's kind of another reason that we see. So that was just like for your information, I showed it. And let's move on. Excuse me. Let's move on and talk about the actual data. So the left figure is showing the corn export volume of our top 6 US corn buyers. So Mexico is the top and China is number 2, Japan 3. So those are Honduras is top 6. And unknown is the multinational companies purchase. So they usually do not designate the final destination. So it is shown as unknown, and others are just indicating the rest of the world. Left y-axis is indicating the corn export shifts. So this is basically showing the comparison between the current export progress and compare with the early February in 2022 export progress. So year-to-year comparison, and it is corresponding to the bar graphs. So the gray bars or red bars are corresponding to the left y-axis, and the blue dots are corresponding to the right y-axis, which is the total corn export sales up to date. So obviously, most countries are showing very low, like compared to like lower exports or lower purchase from the U.S. In the corn market, and there must be many reasons. But one thing I could pick was exchange rates. This is exchange rate trends. So compared to the early 2022, we can see many countries are like having very like high exchange rates. So meaning that their currency was kind of cheaper. So maybe in their perspectives, all the commodities imported are becoming more expensive during the time. So that is kind of one reason that like they lost some purchasing power because of this. And the other reason I could pick was the Ukraine wheat and corn exports. Obviously, they had a big issue because of the war. But after that, as you can see, from August, they started exporting through the Black Sea Grain Initiative. And when you look at the navy bar, which is indicating the corn exports in 2022, this is actually getting pretty close to the 5-year average. So when you compare the navy bar with the gray area, you can see it is kind of pretty close to their 5-year average, meaning that even though Ukraine had a big shock and they initially had a big issue in exporting exercise, but later like actually overlapped with our harvest season, they actively exported their grain, and that I think took some portion of the market and already like many customers lost their appetite because they purchased Ukraine grain, and also at the same time because of the currency rates, so exchange rates and US grain became like more expensive because of that. So those kind of combined effect is also negatively affected the our corn export. And lastly, maybe barge freight. Like this is the basically transportation cost from Illinois to the New Orleans. And as you can see, compared to 2021-22, we had significantly higher freight rate throughout the year. So this is one reason that like we really lost some price competitiveness. Related to that, this is some like selected export beats. So basically showing the top 4 corn exporters port beats. So the green line is indicating the corn beats of US, and red is Brazil, blue is Argentina. And throughout the season, like for the most of the time, as we can see, US corn was a bit more expensive than other countries. So that means we are not having very high price competitiveness. Actually, we lost some price competitiveness because of our domestic issues. And also, like one thing we should note is when we, for instance, based on the past records in 2021-22 market, during the 5 month from April through August, we only had 6.3% of the total export. So meaning that like during this time we didn't have a good price competitiveness, and eventually we couldn't make a big exports at the same time. Of course, like during this time, usually like Latin American countries are like beginning exporting their new crop. So it's kind of course, combined effect again, but certainly this price competitiveness is affecting our export progress negatively nowadays. Now, let's talk about the soybean balance. Again, this is the supply situation, which is quite similar to the corn side. So we have seen reduced production last year, and the total supply is estimated 4% drop compared to last year. And the demand side, it is more like heavily relying on exports, and export is also again estimated to be down by 8% compared to last year. So total demand and supply all like lowered compared to last year, but basically supply reduction was a bit dominant here again. So we are expecting about 8% increased season average price compared to last year, but still we are having somewhat lowered ending stock as well. And also 2023-24 projections, as we can see, ending stock is expected to be increased, meaning that we will see some rebound in the production side, and maybe we will have a little more balanced supply and demand next market year, meaning that still we should be think of some downside risk in the price. Okay, so this is soybean export volume. In the soybean side, actually compared to corn, it is not like as bad as the corn situation. So it is pretty similar to what we had in 2021-22 market. So currently we are just having slightly above the 5-year average, and it is likely to have like the USDA forecast about like 2 billion bushels of the total corn export. And this is mainly due to, as you can see in the right figure, this is mainly due to the China's big purchase. So China purchased about 15% higher than like a year ago. So it made a big progress, and basically that was a major factor explaining this relatively good export situation in the soybean side. One kind of leading indicator for the very short term in the next maybe couple of weeks is soybean export inspections. So when you check this soybean export inspection level, as you can see in the through the black line, it is kind of a little bit like higher, and kind of it is kind of an uptick during the last couple of weeks. So meaning that we will see somewhat good soybean export in the next maybe few weeks, but of course I'm not sure like whether it can be actually maintained in the next couple of months, because probably after March, or like as of March even, like we will see some struggle in the soybean export because of the Brazil harvest is in progress, and eventually it will come to market probably next month. So we should keep that in mind. This is world corn production table, and year-to-year comparison, we are expecting about 5% drop in the total corn production worldwide. As you can see, the top 4 corn producing countries are taking about 70% total production in the world. And when you check this US, EU, and Ukraine's production change compared to last year, they are actually accounting for about 112% of the world change. So it is very important to look at those major players, as you can see, because they are really shifting the market. One thing drew my attention was Argentina. Argentina production level was actually adjusted down in January about by 5 billion tons last month. And again, this month, we are seeing another 5 million tons adjust down. So basically, Argentina is suffering a lot from the drought, and their production level is adjusted down again and again. For the soybean side, world production is estimated to be increased by 7% compared to last year. And these top 3 producers in the world, US, Argentina, Brazil, are taking about 81% of the total production. And Brazil and Paraguay, these 2 countries are actually accounting for 117% of the world change. So that is also like why we need to pay attention to this small number of players, especially when you are understanding this global commodity market. Again, Argentina soybean production is also adjusted down by 4.5 million tons. So basically, Argentina is kind of having the drought issue, and their production level is adjusted down a lot during the last 2 or 3 months. So this is kind of total supply and demand in the global market. So in the worldwide total supply and demand, both are kind of slightly adjusted. So and that is some current market situation. But basically, when you look at the year-to-year comparison, these green numbers, supply will be increased in this market slightly higher than this demand. So it will help some like stock level in the soybean market during this market year. So maybe it might be worth checking what's happening in Argentina. So this is the drought situation. So basically in the February, it is very critical season for Argentina farmers because crop developments are mainly happening during this time. And as you can see, in the left bottom left figure, this is Bolsa Main, the major like crop producing region in Argentina precipitation rates. And as you can see, last year they had a little bit of drought issue. So compared to the average, the green line last year, precipitation in Argentina was slightly lower. And this year is actually significantly lower than that. So we can see this is really a big challenge to Argentina farmers. And the bottom right figure is Bolsa Main temperature level. The red line is indicating this year's temperature record, and green line is last year temperature record. So last year was also a bit like a bit hotter than average, but this year they are like I think more hotter than that. So most of the time they had above average temperature. So basically Argentina farmers are having very dry and hot weather this year. So this figure is showing one picture in Argentina farm, which is kind of very major farm and known to be having very good soil quality. But as you can see, the soybean plant development is not actually that good because of the drought. And this USDA monthly Argentina soybean production forecast is also showing that, like, and adding additional evidence that the black line is the forecast for 2023 Argentina soybean production level. And as you can see, since January, they rapidly adjusted down the soybean production level in Argentina, and it is getting close to 2018, the orange line, which is kind of about 10-year low level. So considering the current situation, is likely to see very low production in Argentina this year, suddenly because of this drought. So now let's talk about Brazil, which is the main character of this presentation. So basically, as you can see, the left figure is soybean acreage and production level in Brazil, and the right figure is corn acreage and production level in Brazil. So the left y-axis is indicating the acreage size, and the right y-axis is indicating the total production, so million bushels. As you can see, both has gone up significantly during the last 10 years. And since 2019, of course, soybean production has been bigger than US. So it's certainly, they are now the #1 soybean producer in the world. And still their corn production is smaller than US, but it is growing pretty fast. And it might be because of their increased acreage, and also might be because of the yield. So somebody might be curious, what is the main driving force? Is it really because of the increased acreage, or is it really because of their higher yield? As you have seen in the previous slide, they have expanded a lot of corn and soybean acreage along the time, but also they actually increased yield a lot by adopting technology and improved their practices. So basically the answer is both. They kind of achieved the two targets at the same time. The graph shows here the corn yield trends between US, Brazil, and Argentina. And US corn yield has increased about 1.5 bushels per acre every year. And in the same time, Brazil first crop corn showed about 1 bushels per acre increase every year, but the second crop corn showed almost same rate of increase as US corn. So Brazilian yield is still about half of the US, but we should note the pace of increase. They have increased the yield by about 100% during the last 2 decades, while we had about 30 to 40% growth. And more critically, Brazilian crops are replacing US crops in many export markets. This is the Brazil's growth in soybean. So the left y-axis is soybean export level, and the right y-axis is the percentage soybean production exported. And the navy bar is Brazil, and the blue bar is US, and the black line is percentage exported Brazil, and gray line is percentage exported US. So in the soybean side, as you can see, since 2012, Brazil has been the #1 soybean exporter in the world, and also it has increased continuously. So now it is pretty obvious that Brazil is the #1 soybean exporter based on the size. But more importantly, what I want to emphasize here is the percentage exported. So while US or the world average is pretty close to 50%, so basically we all had kind of half of our production is consumed domestically and half of them are exported. But when you look at the Brazil, they actually they have increased the percentage exported continuously, and now it is almost 70%. So meaning that, using an economic jargon, marginal propensity to export in Brazil is so high. So, and maybe in plain English, I would say, whenever they got some surplus or additional crops, then they usually ship it outside of the country and then export it. So this tendency is pretty important and remarkable, because considering this expectation of increased Brazilian crops in the next couple of years or couple of decades, and they are going to export it again and again, and maybe more and more, because most of them are nowadays exported to the global market, meaning that in the global market perspectives, it is kind of, there's some very strong producer suddenly emerged and supplying a bunch of crops to the market, meaning that it will give some downward pressure to the price. So in the US farmers' perspectives, it should be certainly a bearish signal. This is another kind of striking figure to me. So this is corn side. Previous one was soybean side. So except for 2012, which was pretty exceptional year because of the drought, we always had been very top corn exporter, even among the top 4 global suppliers. But this year, the projection is saying that we are really getting close to Brazil. The Brazil is in this figure, orange line, and US is the blue. And as you can see, it is really close each other. And unfortunately, this is not a one-time event, because previously, maybe for instance, 2012, that was just one-time event because US had a very extreme drought, and that shock just made our export level lowered. But nowadays, this is mainly due to this this close records is mainly due to the Brazil's growth. Not, of course, we also had some issues in the production, but mainly because of this systematic growth in the Brazil. So we will have to think about what's happening in Brazil, and also regularly check what will be the potential impact of the Brazil in every market. So that's one thing I want to highlight as well. And the other thing I want to emphasize here is why Brazil's growth is so important to us, because Brazil is really replacing a lot of US crops in many markets. That's why I am emphasizing the Brazil's growth. If Brazil is not, even though they are growing, but they are not really taking the portion of U.S. Market, U.S. export market, then it might be not that much important, but it is actually quite a lot overlap. So this is kind of evolving major importers of the Brazilian crops. From 2018, they had kind of a list of Brazilian corn importers, but in 2019, well, we had some like issues because of the prevented planting. So because of the low production, some of our major U.S. corn importers like Japan and Mexico started importing Brazilian crop, and then 2020 they like kind of keep continuing importing the Brazilian crop, meaning that once they like started diversifying import sources from like one country to several countries, then they just try to utilize this channel and take advantage of this price comparison effect. So for instance, and 2021, like Brazil had some production issues, so only Japan showed up among our major corn purchasers. But in 2022, again, Japan and Mexico showed up as a Brazilian corn buyer, like big corn buyer. So as you can see, this is kind of why we need to pay attention to the Brazil's growth, because a lot of it is kind of, we can see some like possibility that many of our global customers can leave us and purchase a lot of grain from Brazil. That is likely. So given this situation, maybe like one question is, will weather help Brazil production? Because we have seen some Argentina issues. So and we don't know like what will happen. Usually like weather is really a moving target, but this is one thing we can check based on probability. So this is NOAA, so La Nina and El Nino probability calculation. And typically in the El Nino, in the La Nina season, like Latin American countries had a drought. And this is, as I highlighted in the yellow box, this is a February, March, April probability. And as you can see, now it is almost like kind of in the period of phasing out from the La Nina condition. So it is actually not very likely to see a severe drought in the Brazil. So considering this probability, I don't think there will be a big issue in the Brazil production. So we should prepare for the mass production and big supply from Brazil in this summer, I think. And lastly, this is about the Brazil. So again, this is showing some like how Brazil is stepping on the toes of U.S. export markets. So this is, of course, the China situation. So China soybean imports, China cotton imports, and China pork import, and China beef imports. I'm going to emphasize soybean import side because maybe that is something the most related to this presentation. As you can see, after like trade dispute between U.S. and China, we have seen very significant increase in terms of Brazilian market share within the China, and at the same time, we lost a lot of market share in China. So as you can see, the U.S. portion has decreased a lot compared to 2017. So that is one thing we can like see. And actually, in many other markets like cotton and pork and beef, we can see Brazil has increased its portion a lot in this market. So certainly, it is kind of bearish signal that like if we are like really losing this opportunity, then maybe that means we are losing a lot in terms of this export market. And it should be worth checking the progress in the infrastructure of Brazil. So let me talk a little bit about it as well. So as shown at the beginning of my presentation, the soybean grain flow is mostly starting from the US or Brazil, because those two are major soybean producers. An important part will be the route from Santos to China. So Brazil actually completed paving their major highway in 2019, which is called BR 163. This represents Brazilian transportation improvements. And indeed, the freight from Santos to China has gone down a lot along with the completion of highway construction. So it is not going to be one-time pressure if we see a reduced export demand for our crops, especially maybe with respect to China or many other our export markets. So that is that was the Brazil. And now let's change gear and check the biggest export market in the world, China. This is a graph that I generated from the FAS forecast of US ag exports to China. So first, when you look at the gray bars, the export volumes and percentage changes from last year can be found. So corn, wheat, livestock are major ag commodities that we will have lowered exports to China. But also I put the dollar value changes for comparison. In dollar terms, surprisingly, except for wheat, all commodity exports are estimated to go up. This is mainly due to the exchange rate. As I said before, the high exchange rates led to lower demand, but at the same time, it raised the dollar values. So that's why even though we are seeing somewhat like reduced export quantity, but also in the dollar terms, we got some revenues. So that is something I want to share. So, and also like recently China like started reopening after finishing the stringent COVID policy. So many people are expecting some like demand boost from China reopening. So probably that could imply something to the commodity market as well. But the timing was actually not that much good for US farmers, because when you look at this left figure, China typically purchase a lot in the harvest timing of Brazil and harvest timing of the US. And this reopening timing is actually pretty close to the Brazil harvest time. So if they see some domestic demand increase in China, they might likely to purchase a lot Brazil crops, because that is much more like easier and maybe more like pricely, more like cheaper compared to US crops during this time. So at least in the next couple of months. So in that sense, it's kind of nowadays a little bit like it's fading away to see very like big benefits from this reopening impact in the US grain market. That's my feeling. And also nowadays the tension between the US and China has alleviated, meaning that because of the spy balloon issues. So this like national security like debate can also negatively affect the regulations or like kind of export progress to China. So that is something we have to keep in mind as well. You might wonder like why I am not talking about wheat that much. So let me quickly talk about like the wheat export situation and why I am not like putting that much emphasis compared to corn and soybean. So basically US wheat export is also very low this year, and actually this is very historical low level. And as you can see in the right figure, this is certainly the lowest level like over a couple of years and even over 50 years. So it might be like actually interesting and important to check this. But when I checked the wheat balance sheet here, the main thing I want to highlight here, of course, we are expecting somewhat decreased exports, and basically the wheat supply is estimated to be decreased a lot compared to last year, and then the demand is estimated to be increased by 1%, the same demand in total, and supply is somewhat decreased. And the main reason that we are actually having this like balance is the ending stocks. So I actually tracked the ending stocks of wheat in the US, and actually compared to the periods before COVID, we usually had about over 1 billion bushels of wheat ending stocks. But after COVID, mainly because of the production issues, we had some bad cycle. So we had like about every year we had like 200 million bushels lowered ending stocks. And now this year, like ending stock is about like 55% of what we had in 2019-20 market. So basically this current like low exports in wheat and maybe interrelationship between like the global commodity markets in the wheat side is mainly actually driven by our domestic issues. So our like stock is so low, so we don't have a big capacity to export. So that is why. So in this case, actually, it is unlikely to see the global market is affecting the US market because basically we are suppliers, but we don't have much. So we are not supplying a lot, and that's the end of the story. So there's no room that competition can play a role in this case. So that's why I'm not emphasizing a lot in the wheat side when I'm just talking about international commodity markets. So now let's talk about Mexico. So US Mexico like corn issue like has actually been going like I think the debate has gone like has been ongoing for a couple of weeks or a couple of months. So the main point or main complaints of Mexico is they are worried about the food security and food safety of genetically modified corn. So for your information, Mexico is one of the top 2 US corn importer, and on February 14th, Mexico tweaked the decree on GM corn, pushing to ban using the GM corn for food. So basically, they are kind of banning the US corn import for food purposes. So, and as you can see in the right figure, right after that, futures market reacted to this negative news. So the corn futures price has gone down by about 1.7% for 2 days. But like also like what I want to say here is at this point, the immediate impact of the decree on our commodity markets might be limited because this like GM corn for food is basically like white corn, meaning that about 4% of our corn export to Mexico. So based on the size, the impact should be limited. And GM corn, still the yellow corn, like for animal feed and industrial use are allowed. And even they actually deleted the deadline, which was set in 2024. So so there's no deadline for this like allowing importing the GM yellow corn. So in that sense, probably like they are just trying to like find some like you know negotiation range so that like okay, I am banning this white corn but also like allowing this yellow corn. So that is maybe the stance of Mexico, but like maybe like there should be concern moving forward, because in my perspective, once they establish this kind of non-science based regulation, because there's no like scientific evidence like proving that the GM corn is like making the human health issues. So once this like non-science based regulation is established, it might be easier for Mexico government to set additional controls on yellow corn and other commodities based on their domestic interest. So that is actually what like US sides are like mostly concerning about these actions. So we have to keep an eye on this because Mexico is one of course, biggest consumer in the global market for U.S. crops. So this situation can be something something important precursor of the next year or next couple of years, like market prospects. And now let's talk a little bit about new market year. So this is new crop prospects and acreage expectation. The left figure is basically the corn and soybean acreage, and the numbers inside is indicating the percentage between the corn and soybean. So basically the yellow side is the corn and green is soybean. And considering the past reduction in corn acreage last year, and based on the USDA long-term projection, I predicted about 3% corn acreage increase in the 2023-24 market, and will be no change in the soybean side. And another like forecast provided by the S&P Global Commodity Insights, this consulting group also provided like corn acreage will increase by about 2.2% compared to last year, and soybean acreage will increase about 0.6%. So we are, I think, pretty much in the ballpark, I'd say. And this is kind of what's happening in the fertilizer market. So fertilizer prices are stabilized nowadays, and market seems to converge back to the new equilibrium, and also the warm winter is giving a positive impact on the fertilizer prices. So currently it is not like very high probability, but maybe like if the war in Ukraine still like has some potentials, and that can like perturb the fertilizer market again. So, but other than that, at this point, like the import market seems like pretty quiet, like at least compared to last year. And this is another news like that might be impacting the new crop market. So based on the USDA weekly weather and crop bulletin, like which was released 2 weeks ago, I think. According to the Mato Grosso government's announcements, soybean like harvest is like slower than last year, and corn planting and cotton planting is slower than last year. So that's what's happening in the Brazil, meaning that their like crop progress is kind of getting slower than last year, and maybe mainly because of the weather. And we should think of what's the implication of this. So because as we have seen before in my presentation, Brazil will have a big impact on the global market, and eventually that that demand will affect our domestic market. So, and still, like, although their crop progress is slower than usual, but still the production estimate itself has not changed. So meaning that maybe the most likely scenario will be they will just deliver the grain slower than usual year, so normal year. So this is the current February point of time, and then this is the main crop, the second crop corn, Brazil, and the yellow bar, the orange bar is indicating the harvest time window. And if they actually deliver the grain very late because of this slow progress, then maybe Brazilian mass crop corn will arrive to the global market in September, which is kind of the same timing of our harvest season. So that means we may have an issue in the price because of this mass supply and production is coming to the market and lower the price a lot already before the beginning of our new market year. So preparing for this downside price risk might be a wise choice. So at this point, it may not be a bad idea when farmers are purchasing some chemicals and inputs. At the same time, they make some forward contracts or future sales so that preparing for this downside risk. could be a good merchandising strategy. So as a closing remarks, my message is look at the global market, and so far, current market situation is basically negative supply shift and negative demand shift, but supply was dominant. So we are seeing still bullish prices, but the wild cards are, we have seen this Brazil's growth a lot, and they are really nowadays affecting the global market. And in some markets, especially, they are nowadays really outstanding players, meaning that we have to prepare for their potential impacts, and eventually that will affect our domestic market as well. So, and also I mentioned the China reopening issue, but nowadays it's, I think, kind of being less important because of, political issues as well as the timing itself. With that, let me finish my presentation, and if you have any questions, feel free to ask me. And this spring monthly webinar will continue next month. So the March webinar will be about carbon footprint of urban sprawl by Dr. Yao Wang. So please sign up for it, and hope you enjoy it.
Okay, thanks very much, Seungki. That was a tour de force of where we are in global commodity markets. And I think you answered your question at the beginning about where Brazil is going. I think that was very interesting. So I have a question in the chat box. It's actually a three-part question, and I'm going to add a fourth part. So how much additional corn can Brazil produce each year? Will most of that come from yield increases or land increases? And I guess my tag-on question is, are those yield increases coming from seed technology, or is it a broader combination of Brazilians just being more productive in the way they use the, total factor productivity is increasing? And then the fourth part is, they're going to continue to deforest the Amazon. So that's a four-part question, including my bit.
Yeah, I think very important and interesting question. So basically, I think at this point, I see really that both are major factors of the increased production. So acreage has rapidly increased, but at the same time, yield continuously increased. So, well, I would say, I think now it's hard to weigh something is more dominant than the other, at this point. So, but maybe in the longer term, they will face some land limitation. And at that time, we will see maybe yield will be the major factor. So previously, I think the acreage increase the main factor of the production increase. And then nowadays, it's kind of yield increase is kind of balancing this production. So the two factors are driving together, this yield, the production increase. And of course, when it comes to talking about the yield increase, certainly Brazilian farmers are adopting a lot of the GM seeds. So basically biotechnology is the one reason, but also at the same time, they also learned a lot about how to use the fertilizers and how to take advantage of some soil conditions and practices. So basically they are kind of adopting and learning from US farmers and kind of mimicking some of the successful stories so that they can get a good harvest.
So let me, just a follow-up question again. Our former colleague, Carl Zuloff, wrote a piece back last November about, and I talked about this in my webinar a few weeks ago, and that is that there's this consumption growth yield gap appearing globally, so that consumption growth is continuing to go up over time, but the rate of yield growth is not keeping pace with it and hasn't been keeping pace for maybe past 20 years. Looking sort of just into your crystal ball, how much of that gap do you think Brazil is going to be able to fill on either the feed grain side or on the oilseed side?
Well, I think, I think at least for the next couple of years, at least I guess maybe about a decade or so, Brazil will keep increasing it. So pretty optimistic of filling the gap to some extent, but of course not sure because I actually don't know what is the exact gap, and probably that should be a big question because the demand when you are talking about this gap, the demand side is also like changing because of the population change, but also in the production side, we also know like it is keep changing because of the weather challenge, global climate change, but also like maybe expansion and technology change. So positive and negative factors are like fighting each other. So, but like to me, in my understanding, maybe in the next like for next decades, for 10 years, we will see maybe somewhat improvement in the food balance because of this Brazil's role. But who knows, when Brazil is like get affected like heavily by weather shock, then still like that will like also suddenly affect negatively the global food balance again. So in that sense, of course, it's really hard to say. Maybe in the steady state, I can say something, but
Right. Well, it's an interesting question that Carl has raised.
Yes.
I found it very interesting. Your answer, sort of what I would have expected. It's really hard to predict, I guess.
Yeah.
Let me ask you a question about, and please, anybody who's listening still, feel free to send us your questions through the chat room or the Q&A section of Zoom. But I have plenty of questions I can ask you just to keep the conversation going here. I want to ask you a question about the Ukrainian, the grain export deal. The grain export deal was signed originally back in the summer, it was renewed in November. It's up for renewal again in March. If you look at the most recent data, it looks like, exports have been slowing down. The Ukrainians, not surprisingly, are blaming the Russians for holding up inspections, both coming in and going out of the Black Sea. Yet Russia claims it wants to see export sanctions lifted on its own grain exports. There are no export sanctions except self-sanctions. I think you said that Russia has actually increased its grain exports in the last year. So I guess two questions. Where do you think that grain export deal is going to come out? Do you think it's going to get renewed? And how can Russia get those exports out? Because it had a pretty good crop last year, if I understand it correctly.
Well, I think based on the weather, actually, like except for the war, like Ukraine region and maybe west side of the Russia, they had pretty good weather last year. So based on production, like based on the weather and the climate condition, production itself shouldn't have been that much bad. So they had some capacity to export, and maybe the question is who is going to buy that, and probably some like countries in like who are not really like participating in these sanctions, like maybe developing countries in nearby Russia and some part of the China and maybe North Korea might be like consuming some like grain from Russia. Those are, I think, something I can guess, but of course there's no really transparent trade channels like from Russia to other the consuming countries.
Right. I mean, I guess the bottom line is that we should expect continuing volatility in these markets with the uncertainty about, whether that deal is going to be continued or not.
Yes.
A quick follow-up question on you showed the data for US wheat stocks were pretty significant decline in US wheat stocks.
Right.
The FAO is really worried about global wheat stocks, an all-time low or a very low at the moment. Do you see any, and wheat, of course, is one of the three most important subsistence food crops, along with maize, corn, and obviously rice. Do you see any hope for rebuilding those stocks? Obviously, you don't see much hope from the US, and do you see any hope anywhere else? Because I think that's a pretty significant thing to be following, that we tend to get big price spikes when we've got really low stocks, and we have really low stocks, and you've had this supply shock.
Yeah. Well, at this point, unfortunately, I don't see very big hope because it has been continuously happening. So maybe we will suffer from this low stock level like for the next couple of years, because it will take some time to recover it. And maybe if we have a good harvest, then maybe it will kind of improve it a little bit, but still like that is way behind of where we were like previously, because in 2010s, we usually had about 1 billion bushels as an ending stock, but now we are just having, 0.55. So
Right. When I remember, reading, and I think I said it in my own webinar, and I've said it in a few county meetings, that if you look at the global stocks, 50%, according to USDA, 50% of the global stocks are held in China. And China typically is unwilling to release those stocks to the world market because they're such big consumers of wheat. So
Right.
it'd be really interesting to, and Wendy Osborne has just put a note in the chat saying wheat exports are low due to drought in the Western US. That's
Yes.
an important point that we need to remind ourselves of.
Right.
Let me see. Oh, I have a question from an anonymous attendee. We're hitting our time limit, but let's take this question.
Mhm.
Will the US likely lose its dominance in the world corn soybean export market, given how competitive Brazil has been with their production?
Yeah, I think that's my point. So probably yes, that's my answer, shortly. And then maybe if that is really inevitable, then maybe my message is then what should we do? What would be a good strategic actions with respect to that? So maybe first, as an individual farmers, people can check the progress in Brazil and can actually set up their strategies of merchandising, maybe setting up some hatchings and some other risk management strategies to prepare for that. And also maybe in the national wise, this is really oligopolistic market. So maybe it's still US will have some market power in the global market, but still now we are not that much powerful as before. So that should be kept in mind.
I think the most surprising graph you have, if you didn't already know it, was the one of corn exports. Those US exports getting pretty close to Brazilian, or rather Brazilian exports of corn getting pretty close to Brazil's. And I think from having heard you say this at county meetings, I think that's caught a lot of people by surprise.
Yeah.
Maybe not for soybeans, but certainly for corn.
Right.
One quick observation, and then we probably should finish up for today. The whole business with GM corn going into Mexico, I think you hit the nail on the head. We mostly export yellow corn, which is fed to animals, and the Mexicans aren't going to ban that. And you wouldn't have, I don't think they're asking for labeling or anything. Do you really think this is about GM corn? Or is this just a populist leadership in Mexico trying to protect small scale Mexican white corn farmers?
Well, I think it's more I think this is really strategic actions. So maybe it could be based on the political calculations, and maybe sometimes it could be used for the negotiation power so that they can get a larger bargaining power by arguing this, and then maybe try to earn more on the negotiation table. So looks like, to me, it looks like more strategic, because they used to they didn't have any problems importing the white corn before, and they are now raising it and kind of increasing the voice and the claim. So
yeah, I think this is just populist Mexican politics. We've had this discussion about the safety of GM crops now for over 20 years, and it's I have to wonder whether the US will take Mexico to the US, the new USMCA dispute resolution mechanism, or whether it'll take it to the WTO. But I guess we'll wait and see there.
yeah.
Anyway, I think we need to finish up there. I just want to thank Seungki very, very much for this presentation. I have lots of interesting information there. Your slides will no doubt be made available to anybody who would like to see them. We've recorded the webinar if anybody wants to go back and look at any particular points. If those of you still online could take time to fill out the survey, we'd much appreciate that. Brent has been sending around the link for that. And then just one more reminder, again, of the slide up on our screen. Next month, on March the 29th, we're going to be really happy to introduce actually our newest colleague in the department, Yao Wang, who's going to be talking about urban sprawl and its carbon footprint. So please sign up for that. We really look forward to seeing, well, not looking forward, we can't actually see you, but we hope you're going to be online with us next time. So once again, thanks everybody. Let me just check a few new messages. No more questions. I think we've taken on board all of the questions. So thanks very much and have a good day, everybody. Thank you. Goodbye.
Thank you, everyone.
Okay, I gotta run, Seungki, but thank you. That was a great job.